Welcome to PM Express Business Edition. Well, today we are not coming to you from Ghana, but rather in Washington, D.C., USA, on the back of the just ended annual IMF spring meetings in Washington, D.C. And indeed, this is a special edition because we have a three-part show when it comes to PM Express Business Edition. The first one has to do with the governor of the Bank of Ghana, Dr. Johnson Asiama, as he speaks about the cedi and our results and what is the Bank of Ghana doing to firmly stabilize the Ghana cedi. And then we hear from Setekpe. He is an economic advisor to the president about the IMF program and how do we keep the program on track. And we get a view of the former chairman of Parliament Finance Committee about the economy, the Ghana cedi, and how do we sustain this. This is our special edition of PM Express Business Edition in three parts. Let's first watch the governor of the Bank of Ghana, Dr. Johnson Asiama. Welcome to our special coverage of the annual IMF spring meetings in Washington, D.C., that is United States of America. And our special coverage, we are indeed privileged to have the governor of the Bank of Ghana, Dr. Johnson Asiama. Doc, I appreciate your time so much, and even though quite a tight schedule, you've been able to make time for us. For you, the meeting is rounding up. How would you describe the meeting so far for you as a governor of the central bank?
I know the meeting has been quite successful. Remember, it all started from Accra. At the conclusion of the staff, level, visit, where we managed to attain a staff level, agreement. We continued, to Washington, D.C. We've had a couple of meetings again just to tie up the loose ends. And I can tell you that it is looking good. We are making progress. It's all about restoring macroeconomic stability. It is like a public good. It's something that is good for everyone. And we are quite happy with the progress we've made so far.
You spoke about the fourth review, and one critical thing that came out of this fourth review was the fund's comment about what the Bank of Ghana has done so far, building up some strong reserves. I mean, let me first get your initial commentary on this comment, more of a stamp of approval by the fund, and even the fact that you've actually met the reserve accumulation even before the program ends.
Way ahead of time, way ahead of
time.
How
does the bank take this?
Well, it's been broad-based. Remember a number of things. The external sector has been quite strong, admittedly, in the last couple of years. We've seen some strength, further strengthening there as well. Remittances has been doing very well. Gold. Gold is the new kid on the block. Gold inflows have been doing very, very well. And also don't forget cocoa. Cocoa inflows have also been doing quite well. And so on the whole, and when it comes to coordination as well, if you see the way the fiscal has been, has been running so far, that has been supportive, as well. So it's all about discipline. It's all about a strong, external sector. That is what you are seeing on the cedi. Going forward, we think that we have enough reserves, to be able to preserve the stability. But I must be quick to add that we are not, going to operate a fixed exchange rate regime. The cedi is an endogenous variable. It has to be, allowed, to float. It can go up, it can come down. Our, focus is to ensure that it is not excessive when it comes to its volatility. And so we are aware of trends this week. We are monitoring, issues. We believe that the market is resetting. We believe that expectations are being re-anchored. And so we are on top of the game. We are observing it by the minute, and we'll look at it,
Doc, do you think that the market is responding to the good news coming from the fourth review, the reserve accumulation? Because the cedi has seen some strong rallying, even going into this week as well. I know you already aware. What do you make of this development?
Absolutely. So that's why I said it's a broad-based of factors. The staff level agreement, it was like a seal of approval that yes, we are restoring macroeconomic stability, we are doing the right things. And then the fact that, of course, don't also forget that the dollar itself, is weakening as well. But then the external sector has been strong. Those inflows have been doing pretty well. Gold is doing so well now. Our prayer is that the trend continues. But what I can tell you is that the days of excessive volatility in the city, it's coming to an end. Macroeconomic stability is a public good. What we have on our hands still is the fight against inflation. But so long as the city is, strengthening, then it also makes it easier for us to control inflation going forward.
Doc, the economists always say that all other things being equal, we are hoping that we don't have any blips and there's no strong demand ahead that would force you to deplete the reserves. But again, going forward, what's the assurance I have for you that George will be very disciplined with these reserves so that we can maintain this confidence in the long stretch?
So we have a projected cash flow, when it comes to the foreign exchange demands going forward. So we have a good idea of payments that would have to be made, probably 2 years from now. So we project all these. We don't just wait until there's a demand before we act. So we have it all figured out, and we think that the current levels of reserves we have should be able to carry us through, through at least a couple of years, coming ahead. And also remember, the fund program brings about its own dividends, because now there's renewed confidence in the economy. You can see lots more of, foreign investors coming in. People are now asking about bonds once again. That is exciting. Inflows will pick up, and then you see it in terms of, movements in the city.
Doc, do I get assurance from you also that you're going to be active on the market about sustaining the city's current stability? I stand to be educated. You have been in this area for quite a long while, and this is not to flatter you or anything. For a long time, I never saw the city, and running even from last year to now, where the city was firmly stable against the US dollar. For you, what surety again would you give people out there that, listen, you are committed to these programs and policy measures that going forward, we'll see the city being firmly, at least stable. If you need the blips, it's normal. But
so the stability you are seeing now is not because we are intervening in the market. It's not because we are selling reserves for stability. No. Remember, our reserves program is actually going up, by the day. We are building more and more reserves. All that we are doing is strengthening, the surge in inflows. A number of foreign exchange market reforms are being implemented. It is the combination of all these factors that you are seeing. And so long as we hold that anchor, we'll continue to see stability. And I made the point earlier that when we say stability, it doesn't mean the city has to be fixed. It doesn't mean that the city has to over-appreciate, because that in itself is not good for our exports. So in real terms, we are observing the trends. We want to make sure that the city is not misaligned in real terms. It stays within some kind of band, a sort of range that is appropriate, a sort of range that is consistent with macroeconomic stability. So that is what we'll be looking at. But all I can tell you at this point is the days of excessive volatility of the city is certainly coming to an end.
Dr. Fan was, and even the MD at the press conference, he was making an argument that let's not be so much fixated about growth, but also we should look at how we can check inflation, and even pushing recommendations forward about maybe further hikes will be needed as well. In terms of the inflation outlook, is the Bank of Ghana firmly on the ground in terms of checking the situation?
Why do we believe so? A number of things. Look at what is happening to the city. Look at the policy action that was taken at the last MPC. And then also look at what the budget is doing, what the fiscal is doing currently. That should help to tackle food inflation. So a combination of these should be able to deliver on lower inflation, going forward. The next MPC is just about, coming in, starting somewhere around the 22nd of May. We are beginning to prepare, our data, going into the next MPC. We will take the right decision when those meetings also start.
Doc, your final words as you wrap up, engagement with investors, what did you get from them, and the assurance that you continue to manage the space tight to reinforce the confidence?
Well, it's all about confidence in an economy. That in itself drives investment. It drives foreign investment. And we believe that we are doing just that. You look at the fiscal measures, the anchors, that have been introduced into the budget now. Going forward, we believe that the fiscal should be able to hold itself tight, and because that's where it starts from. And we are seeing the picture from what the foreign investors are telling us. We don't intend to depart from, this way of doing things. We intend to maintain this sound way of managing an economy. The stability has come to stay, which will also spur, growth and reduce inflation going forward. So yes, we will keep our eyes on the wheel going forward. We hope that we'll be able to complete the farm program, on schedule, and then we will move to better things after that.
Doc, I appreciate your time.
Thank you. Thank you very much. We'll come back again, Doc. Thank you. Anytime.